7 days in, gold hit $5,400 this week, a new all-time high, and right now it's sitting at $5,176, down from the top. And I'm going to tell you exactly why that pullback isn't a warning, it's a door opening. Welcome to Golden Horizon. Let me give you the week fast and clean. On February 28th, U.S. and Israeli forces launched coordinated strikes on Iran. Khamenei was confirmed dead. Iran responded. Missiles hit Dubai, Doha, Bahrain, Abu Dhabi. The Strait of Hormuz was officially closed. We called that exact trigger in Video 1. That was the binary event. Gold went from $5,100 to $5,400 in less than 72 hours. Then it pulled back. And that pullback is exactly what I want to talk about today. Here's what's actually happening. When gold spikes hard on fear, institutional desks that loaded positions in the 5100s take partial profit near the top. That's not the thesis breaking, that's position management. The war is still live, the strait is still closed, tanker traffic has come to a standstill, the U.S. Navy is now actively planning to escort oil shipments through. None of that is de-escalation, that's management of a crisis that hasn't resolved. The structural forces haven't changed. A leadership vacuum in a nuclear-capable country, a strait that carries 20% of the world's daily oil supply, effectively closed, central banks that bought 863 tons of gold in 2025 alone, JP Morgan with a year-end target of $6,300, gold is up over 20% year-to-date. The correction is healthy, the trend is intact. Now let me give you the 3 signals I'm watching into next week. Signal 1, the Strait of Hormuz. Every day it stays closed, the oil supply shock compounds. Insurance premiums are surging, tankers aren't moving. This is the inflation engine that traps the Fed and removes any ceiling for gold. Watch for any official statement from Iran's Transitional Council on timeline. That's the release valve. Signal 2, Iran's missile capacity. Reports indicate that hundreds of Iranian launch systems have been destroyed since the conflict began. A degraded Iran changes the calculus. If Iran can no longer project offensive power at scale, markets begin pricing a faster resolution. That's the short-term bear case for gold. A pullback towards 4,900 if a diplomatic channel opens publicly. Signal 3, CPI on March 11th. This is the number I'm watching most closely next week. Oil above $80 means February CPI runs hot. A hot CPI reading with an active war means the Fed is completely trapped. They cannot cut into an inflation shock. A trapped Fed removes one of gold's only headwinds. If CPI surprises to the upside, gold breaks back through $5,300 by Wednesday. Here are the exact levels for the Monday open. Gold is currently at $5,176. The market is closed Saturday and Sunday. On the Monday open, consolidation is expected in the $5,052 to $5,208 range. Key resistance is $5,208. That's the first wall. Break and hold above it, and the next targets are $5,300, then $5,426, then the all-time high at $5,400 plus dollars. Support sits at $5,052. If we lose that level on a major de-escalation signal, that's the fear premium coming out, not a structural breakdown. The bull case next week. CPI hot, strait still closed, gold through $5,300 by midweek. The bear case? Trump announces direct talks with Iran's interim government, a strait reopening timeline becomes visible, gold fades toward $4,900. Right now, the market is not betting on the bear case. Now, here's something most channels won't give you, a direct entry recommendation. My buy zone is $5,050 to $5,150. That's the technical support band and the range where institutional buyers have consistently stepped in during this conflict. If gold pulls to that zone on Monday, on any de-escalation noise or dollar strength, that is the entry. Not a panic, not a problem, that is the setup. Stop loss below $4,980. First target, $4,400. Second target, $5,595, the previous all-time high. Third target, if the straight stays closed through March, $6,000 and above dollars. If gold opens Monday above 5208 and holds, the entry shifts higher. In that case, wait for a retest of 5208 as support before adding. Don't chase the open. The risk to this trade is a surprise ceasefire announcement over the weekend. That's always possible. That's why position sizing matters more than timing in this environment. This is not a moment for all-in. This is a moment for disciplined, staged entries into a confirmed bull trend. Zoom out for a second. This conflict didn't create the gold bull market. It pulled the curtain back on one that was already running. The chart knew before your newsfeed did. It knew in January, it knew in February, and right now, at $5,176, with a war live, a straight closed, a Fed trapped, and JP Morgan targeting 6,300 by December, the question isn't whether gold belongs in your portfolio. The market already answered that. This is Golden Horizon, where macro meets metal. Subscribe, hit the bell. We'll be back Monday with the live open breakdown. See you on the other side.